today I just wanted to do a quick review on um, gas. Sorry, not gas, silver, XAGUSD. I hope you guys can hear me. Um, so without further ado, I will just start. As you can see, there are some annotation on my chart. Um, this is the monthly chart, as you can see. I'm just going to go ahead and remove everything. So guys, like we know, trading is all about doing it right. You know, you have to just do it right, and we treat like the interbanks, like smart money. Yeah. So I'm just gonna show you how the institutions trade on the higher time frame and how we look for high quality setups within the week. As you all know that we trade the weekly candle every week. We're just trying to predict where the weekly candle will respond to. That's just it. We are not worrying about where the weekly candle is going to close. All we are worrying about is how is it going to open and where is it going to respond to. That's just it. So without further ado, let's just dive in. Let's zoom in a little bit. Bring the chart. Okay, before that, looking at this chart, I want you guys to, we want to know the highs and lows, the obvious highs and lows. So I got one here. So I already have templates, I don't want to stress myself, so these are my templates I use on the, what is it called, vertical horizontal line. Okay, sorry, the vertical line, not the vertical line, please, the horizontal line. So I just put it as old high, and then I'll mark the old low. This is the old low. As you can see, there is nothing below this low, and there is nothing above this high. Let's just cut this right. Okay. Um. So inside the range, we have this high right here. This high right here. So we're going to annotate it like that. Bring it down. Okay. So we're anticipating price to draw to there. So as you can see, this is basically what I'm going to do on the monthly chart. As you can see, this is we have a stop run right here. Okay, just connect the text and then stop. Alright, got a stop run right there, and then price expanded. What do we do have here? We have a fair value gap right there. Price didn't quite touch it, but look what we have here. This down close candle. There are order block, and then they tap into the week. So anything from the, as you guys all know, anything from the week to the opening price, that's a valid order block right there. So as you can see, we expanded after taking sell side liquidity. We expanded, and as soon as we take out this low, my eyes immediately went up here. So I'm anticipating them to, retrace back, to expand back to this high and take the buy stops that are residing over here. This is the monthly time frame. You don't have the patience to trade this, time frame. You don't have the capital. You can trade it. But this is how the the smart money trade it. You understand? So this old high right here is our first objective, and we have hit it. Um, right there. I like to get this line straight. Okay, this is the buy side liquidity. So this is the buy side liquidity buy stops. And then we got some more resting here. So this is the monthly. For now, there is nothing we can do here. Let me annotate this. This is it. If I look at plus FVG, and this is. I know a lot of you guys don't even know what the fuck this means. You just gotta bear with us. This is the language that we use to, you know, communicate with the market. You understand? It's a language that ICT created, and we use it to, communicate with the market. So let's scale down to the weekly time frame. As you can see, on the weekly time frame, price respected this, so well. So we break out of the range that was created, you know, from this range high to this range low. We broke out, and we still expecting higher prices. So this is the weekly time frame, and it's nothing like an add to it. This is all old data that we don't need. This, I can just take this out, take this out. Okay, so let's focus on the current price action. So right off the bat, we got a high here. Okay, we got a high. Okay, let's make this straight. Nice. And we got a low. In this leg, this is the low. Hmm. So, and then we got another high. So, to me, automatically, we have. Sorry, I'm using free trading view at the moment because I want to trade one pair, so I don't have to, use multiple threads and stuff. I'm just gonna name this range high. Gonna name it down range low. Now this is range high, mhm, and this is range low. Okay, so we broke this out. We dropped down, and then look what happened. Look what happened. We broke up, expansion, retracement into what? Into an order block that was resided right here to the T. This is beautiful, guys. Um, and then price went, and we didn't take out this high. Look at what price did again. We had news. Price took out this low right here. And then we expand. Okay. This is the weekly. So let's go down to the daily time frame. So this is the daily time frame, and I want to bring your attention, guys, to this. We have a low here, a high here. Then if you pull our fade, we tap into the 0 point below the 50%, the 0.62% retracement level right there. This is great. And then we expand. Retrace, we expand. We drop down all the way back to the order block, and then we expand. So let's go to the current week. And if you pull your fib, and you anchor it to this high, you get the OTE from the 62% retracement level to the 70.5 retracement level. That was the OTE. And right there is the order block. This is a very nice trade. Very nice trade. You just gotta get out. There is a high here. This is your trade, man. It hit the TP straight. So let's pull this off. Take this out. And then let's focus on current price action. 4 hours. So we took out this high right here in the 4 hours. This is an old high, so it should have a significance over price. What I'm saying. So I'm gonna just name this key level. Okay, and then as soon as price taps that level right there, we did it around Friday, March, around 6 a.m. and we have that displacement. What I'm saying. We always want to see like this. When we say you want to see displacement, right? This is what we mean. And look at what it left. How many components we have? We have the FVG. Okay. Sorry, the wrong one. This is minus FVG. And then we have the order block right there. Beautiful, right? Amazing. This is silver. I don't even trade this pair, you know what I'm saying? I just use it to gauge how gold, is behaving. And then price drop down. We took out this low right there, taking out this low, this low, this low, on this low, and then this icon lows right here. You know, classic. So I'm gonna pull up this right there. Then I'm gonna bring this into this, and I'm gonna call it a stop line, right? Stop line. So my eyes is already, at this level right there. And then look at what price did. And then it closed higher. So I want us to, have a look at this. This is Sunday, 18 o'clock. So this is last week price action. And also I want us to look at this price action right here. Let's go down to the 1 hour. Beautiful, beautiful, beautiful. What is it? The gap, new week opening gap. Oh, I love this pair. But the spread, man, you can handle it. I swear to God. So this is new week opening gap, and then we return back into it because this is meant to be filled. You can't just leave something like this. And there is a fair value gap here. There is a new week opening gap here. This is a balanced price range. You understand? So price took out the low before high probability trade, and this happens around Tuesday 19 o'clock. So it is out of section. So this is Wednesday around 12 a.m. We have we had a fair value gap. A minor a little fair value gap. Price tap into it, and then we rallied. New York opens 7 a.m. New York open. Let me just show you something shocking, right? New York open. Look at it. Right there. Can you feel it? Oh, I just opened up this chart today, and I just, analyzed it, and then I just fall in love with it. I just say, okay, it's nice to, So where are we targeting? We have a key level here. We have an old high here, but we don't expect price to, take it up right there, So this is your model. This is what ICT called the one shot, one kill. You entered it around 7 a.m. on Wednesday or whatever it is. This is one shot, one kill. On Wednesday, you hold the trade till Friday, and look at what we reach for. The first place you targeting is this high right here will be your first target. This London high, London section high right here should be your first target. You feel me? In fact, for me, this will be my, you know, final target. This is where I will just target because it is Friday's high, you know, Friday's candles high around 2 a.m. That's when the high was from London section. And then, you got in. If you didn't get in here, you know, this is the second opportunity for you, and this is the highest probability trade. And then let's just visualize how this is. Long position. Let's say you get in around here. The target is here. Your stop loss should be below this candle. This candle's low right here. And then this is your trade. You feel me? This is 6R. You know, if you're risking $100, you're getting $600 in return. If you're risking $10, you're getting $60 in return. If you're risking $1,000, you're getting $6,000 in return. So if you're risking $100,000, you're getting 600,000. You're risking 1 million, you're getting 6 million. So that's how it is. I want us to go down to the lower time frame to really refine this week right here. So I'm just gonna work this Sunday. So let's go down to the 16-minute time frame, and then I want to introduce time of the day to you guys. So I'm just gonna show you one sequence to it. The one that is easy. Your day 7 o'clock. That's the New York Open. It started right here. So you always trade in this window. This window. Okay. Look at it. So it makes sense now. We have a balanced price range, which is a PPR. Took a low right here. We got our entry. We got our first entry here, which is outside the section, which is new day's opening, So time of the day is really important. Even though we are trying to do one shot, one kill, the time of the day is really important. So you see, from monthly down to the 15 minutes. So this is how I trade now, 1 or 2 trades per week. So this is classic power of three. This is the opening price, and okay, so let's take it from Monday to so this is Monday trading, and then Tuesday trading from the low of the week, and then up to so this is sick. This is This is amazing, bro. This is amazing. Power of three, guys. Man, I'm just surprised. Let me just take this off. This is just the stuff someone coded, to just you can set up the time it's locked out. But this is the indicator, we use just to indicate the sections. We don't have to highlight it. It's easier just like that. It's clearer. I just want to remove it so that you can see the power of three. This is accumulation, manipulation, net distribution. As always, as always, as always, this is what we trade. This is what we trade. Um, we have retracement, deep retracement back into